We're watching the action on Wall Street at the top of this edition of India Tonight. The S&P 500 has slipped today after a three-day rally. Only yesterday, bank shares rebounded sharply, and this happened when First Citizens Bank said it's going to acquire the deposits and the loans of SVB of Silicon Valley Bank. Now all eyes are on the congressional hearings as U.S. financial regulators have been called in to testify before the Senate Banking Committee and the House Financial Services Committee. The question on everyone's mind is the banking crisis behind us, or is the fear of the unknown keeping investors on their toes? Let's ask Anurag Singh, Managing Partner at Ansid Capital, joining us from the United States. Anurag, great to have you with us on the show this evening. Do tell us what's your reading right now as far as Wall Street action is concerned and the expectations as far as management of the banking crisis is concerned. We've seen what has happened as far as Silicon Valley Bank is concerned. And now we are looking at further regulations, the possibility of further regulations coming in. Is that going to calm investor nerves, you think?
So, Vikram, it appears that in the near term, the nerves have been calmed. So, at least on the financial stability side, I think Powell spoke and, more than the words, the actions that the government took and the, basically FDIC, which is the insurer for the bank deposits, then the government and then the Federal Reserve, they all came together. And the way they have contained this really sends a strong message that all the depositors' money and the bank money is saved. And I think that is also seen in the numbers, on a 15 to 16 trillion deposit base, Vikram, just about 100 billion moved from smaller banks to larger banks. So it appears that at least the stability question is contained. But again, Vikram, this is something like, what's below the carpet. You only know when the carpet is taken off, right? So we'll have to wait, if it doesn't blow out. But I don't see the possibility, right? It's always there, but it's not something which is likely, Vikram.
Fear of contagion, how much of that fear has actually gripped the market? Have we seen the peak of it, or are we going to see more action based on that fear that is going to make the markets capitulate in the near future?
So, Vikram, the fear looks much different than, at least I didn't get any signals of fear at these levels, right? These are, look at this, S&P still at around 4,000, Dow is about 30,000, NASDAQ, okay, it deserved some correction, but again, it is again reasonably above 11,000. So I don't think this is what fear looks like. And we've seen fear in the past. But generally, I think, Vikram, market is confused, actually. I'll tell you what's happening. So we are stuck in a range because, one, the bond market suddenly sees a recession, right? So yields have dropped, already pricing in the rate cuts that Fed might do. Now, we don't know whether they'll come or not, but at least bond market is pricing in. Equity market is also pricing in rate cuts, but it is not pricing in the recession or downgrade of earnings. And I think that's the challenge, because as long as market sees the same earnings as last year, it can continue to be at 4,000 and maybe a 18 to 19x multiple, and it is still not looking expensive, right? Now, somewhere the earnings recession has to be priced in, which tells us that the market needs to go a little bit lower than at least 4,000, right? So that's when real fear will start kicking in, when we hit 3,800 or 3,700 levels. And I think those levels we will definitely hit this year. Third is, Vikram, both the bond market and the equity market will have to really come and meet the Fed, in the sense that Fed really doesn't know. They have said that, we'll stick to 25 basis point, and they might as well, because they don't know when they will stop. So everybody else outside the Fed seems to know when Fed will capitulate, but just the Federal Reserve doesn't know that.
So keeping all these factors in mind, now what is before the Fed in terms of the print, which they always talk about, that they are going to go with data to decide the next rate decision. How do you think they're going to act, and how much of a bearing do you think that's going to have on markets like India as well, and what the RBI does next? In fact, this is going to have an impact as far as the markets go as well. So You told us about what they're factoring in. Would there be negative surprises if we are not going to see peak interest rates having been hit or hitting them in the near future again?
Yeah. So let's break it in two parts, Vikram. Federal Reserve really, I understand this data-driven commentary, but look, I think when they said inflation is transitory, well, the data was there, but it was their interpretation. So despite saying that it is data dependent, it is always subject to interpretation. They say Federal Reserve policy acts with a lag. Monetary policy will, what you did 6 months back will kind of show its effects now. So that's the camp which is saying Fed should kind of stop now because they've already done enough. And look what's happening to the fiscal stability. And so look what's happening to the rate hikes that you are doing just now. It might hit 6 months down the line. The real challenge is inflation has not budged and it continues to be sticky. Friday, we'll get the PCE inflation numbers again. And you will see the core PC is just stuck within that 4.7 to 5.1% range, Vikram. So if I'm Federal Reserve, I wouldn't really celebrate and stop just because, it's known that monetary policy acts with a lag. So I stand in the camp, Vikram, that they will continue to raise by 25 basis points. I see inflation too hot and the risk of stopping in between is too high. It's much higher than the risk of financial contagion that people are talking about. If there is a contagion, well, they will come and contain it. So that's point number one. I think Fed should continue. They will continue. But let's see the numbers. We are also data dependent, right? So if the data comes in and inflation goes down, well, we will not close our eyes to it. RBI is an interesting point, Vikram. Look, RBI is, and I think for the past 2-3 meetings, RBI is not raising rates to contain inflation in India. Inflation in India is, well, I would say contained. We are used to a 6 to 7% inflation. We are not targeting 2% or even 4%, right? People say 4%, but 6% is and especially it's an election season now, which will be kicking in pretty soon. I think between 6 to 7 and the spending happens during election time. So 6 to 7% is fine. RBI is raising rates, Vikram, to protect the currency. And I think that's the point people need to absorb. RBI gets it. But if they don't raise the rates, well, the currency will depreciate and, the oil will be further more expensive, right? From 83 to 87 to 90. So that's the point, Vikram. And I think we need to be cautious of this.
Indeed, we'll keep all these factors that you're talking about in mind, especially investors at this point on Wall Street and here in the Indian markets. But always a pleasure getting your perspective, Anurag. Thanks for joining us on India Tonight.
Appreciate it. Thank you.
Meanwhile, Times Network is hosting the India Digital Fest. It's happening in Delhi right now, even as we speak. It's themed around the future begins here. That's the theme. It highlights frontline technologies and disruptive innovations getting implemented across the Indian ecosystem. Let's cut into the event. Right now, we're talking about this issue, about the entertaining of the next generation. How exactly is that going to happen? On the panel, Manoj Bajpayee, the actor. Sameer Nair, of course, is the managing director at Applause Entertainment, and they're in conversation right now. Let's just listen into what they're saying.